those rules, impairment rules, didn't quite make sense for these types of assets because these are supposed to be the most liquid assets on Earth.
Now let's dive into some of these recent industry guidances that were put out by a variety of different groups. Let's start out with FASB. We've been waiting on this for a long time. You know, the fair market value reg. Previously, you couldn't mark to market, right? You were only taking impairments, and correct me if my terminology is off. And now FASB has implemented this rule change. When do you think, has that already gone into effect? When does that go into effect? If my memory serves, they made the rule change, but it hasn't gone into effect yet. Is that correct? Or did it go into effect recently? Maybe there was like 6 months where we were waiting for it to go into effect.
Yeah, so it's essentially going into effect soon. Maybe to backtrack a little bit on just why we have this. You know, the people who are listening to this are probably familiar with Michael Saylor. He's been saying this for the last couple of years now. I've been saying it since I first understood the industry. Is these assets are currently and continue to have broadening trading markets. You can hop on pretty much any exchange. That's the purpose of exchanges, right? Is they're brokering an exchange between person A and B or pools of assets to be able to facilitate exchange of value. And just naturally, because of that, you would think, hey, if any company who, especially is publicly traded, or any company who buys these assets and adheres to generally accepted accounting principles, GAAP accounting, which is our main form of accounting in the US, you would think these assets should be marked to market up and down if they're being held for sale or for trading purposes. But actually, before we had the regs in place right now, the FASB kind of said, hey, we think these are quote unquote intangible assets. And they are intangible because they're not physical assets. But the body of accounting that wraps intangible assets up into is you have to treat them under the impairment rules, meaning that if let's say you buy Bitcoin and hold it on balance sheet, well, you actually can't mark that to market or mark to fair value as of your accounting period. So whether it's quarterly, monthly, whatever, instead you have to do these really complex calculations that look at market valuation, that look at potentially future cash flows, things like that, and then compare that to your carrying value on balance sheet. And if it's lower, you're going to mark it down. That hits your P&L. You can never mark it back up until you actually dispose of the asset or sell it.
Yeah.
And so those rules, impairment rules, didn't quite make sense for these types of assets because these are supposed to be the most liquid assets on Earth. So I think a growing number of accountants or practitioners really kind of raised their hand and said, hey, FASB, we need to have fair value accounting for these assets. And thankfully that happened. Things have moved fairly quickly. And we had some proposed regs almost a year ago on the docket that the FASB really prioritized and saying, hey, we got to get these pushed out soon. And so I think it was about March, we had the proposed regs come out, and then there was a commentary period for several months, and now the FASB unanimously voted to pass those regs. And I do expect they come online here in the next couple of months. It could be by end of year that we have the final regs. And then that will mean that, there will be a set date, likely 2025 or mid 24, that they are effective, and then you could early adopt them if you want. Long story short.
So when you say early adopt them if you want, does that mean you could adopt them starting like January 1 potentially, when January 1, 2024? Is that possible?
Yeah, I think so. I'll have to go back and look at the actual effective date, but typically when you have a big accounting standard update like that, the FASB says, okay, it is effective for public companies by X date. Private companies will usually get a year, possibly 2 years after that date to implement, or you can go ahead and early adopt it now. So as long as you're following the procedures and the guidance, you can implement those rules today.
Okay, that's
so you can imagine companies like MicroStrategy, Block, certainly even Tesla, they will want to adopt these accounting regs very, very quickly because they can now mark assets back up. But it does come with a number of procedural changes that are going to be time consuming to be able to first initiate. So you have to, break out any activity related to digital assets, you've got to break that in separate footnote tables in the financial statements. You've got to really have some narration, some explanation on what are you doing in the space, and how they're generating cash flows, or what are you investing in them. You basically got to be transparent about how you're interacting with these assets.
Hey y'all, Lee Bratcher here with the Texas Blockchain Council. Thanks for watching. Be sure to like and subscribe. It really does help other people find us. If you like this content, check out the Texas Blockchain Council YouTube channel, as well as following us on TikTok, Instagram, YouTube, and Twitter.